presentation contains current opinions of Moez Ansari, Chief Investment Officer of Compact Asset Management, a registered investment advisor, and are subject to change. Nothing in this presentation should be considered investment advice. We make no assurance that Mo's opinions or illustrations will accurately predict future prices or financial markets. In no event is past performance a guarantee of future performance. A detailed disclosure can be found at the end of the presentation. And now here's Mo.
Hello everyone, and welcome to the Compact Weekly YouTube update for August 26, 2024. I'm Mo Ansari, President of Compact Asset Management. Thank you for joining me today. Looking at the markets overall, we are looking at markets relatively quiet. But first of all, I want to remind all of you to go to the compact.com/media page. That's where you can go to and get all of these updates. Just whenever I post a YouTube update, you'll be notified. The weekly podcast that we do, Javed Now, which is a much longer version of this same broadcast, but it gives you a lot more detail. That's what we do. We talk about what happened last week, what to expect next week. If you're interested in our services, go to invest@compact.com, invest@compact.com, and contact us, and we will be more than happy to help. Looking at the numbers last week, up 1.47% for the S&P. Wonderful week for the S&P. But the winner, the big winner, the star of the week was the small cap at 3.62%. The laggard for the week, technology, only up 1.41%. S&P now is up nearly 20% year to date. You're looking at 19.2%. Wonderful, wonderful year. Market is now within an eyelash of a new all-time high. You know how I say that markets have a way of turning on long weekends? I don't know why. We're going to closer to a new all-time high. Hopefully by this weekend we can get there. Then we might get some pullback, and I'll talk about that in a minute. But we are seeing a broadening out of this market, which is good. So if we see the small caps and all the equal weighted indexes also doing well, and the NASDAQ sort of slows down, not goes down. I mean, if you look at last week, NASDAQ was only up 1.1%, second worst sector for the week. The only negative sector last week was energy. Real estate was the best one, again, with interest rates coming down. The big news everybody was waiting for is the Jerome Powell speech at Jackson Hole. Again, he did the speech, nothing new, said, yep, they're ready to cut, its time is come. That's basically was the headline. So they're going to cut interest rates by 25 basis points in September. Big deal. Everybody knows that already. Are they going to do 50? Small chance that they're going to do 50. I don't think they will, but we never know. And maybe they will preload some of these, front load some of these interest rate cuts as the economy slows. And I think a lot will depend on as we get the unemployment data for this month. We'll get it before the meeting. The meeting is middle of the month. We get it next week when we get the unemployment data. That should give us some idea. If the unemployment comes out weak again, I think that might push the Fed to front load interest rate cuts. The market is sort of looking for 25. If it gets 50, that would be bullish for the market. Oil market was down last week, but again, because today it's up big because of the Middle East. Again, we saw Hamas or Hezbollah and Israel going at each other. The Hezbollah fired some missiles into into Israel, and Israel bombed Hezbollah. So that seems like that caused some anxiety in the oil market, which moves more on fundamentals rather than technicals. Interest rates sort of drifted lower, but 3.89 to 3.81, not a big deal there. Relatively still sitting at that 3.8 interest rate low that we made last December of last year. As long as we don't go much, much below this, as people get worried that the economy is slowing too much, the Fed has got to cut too much, that's when interest rates come down faster. The Fed brings rates down to stimulate the economy. If that happens, that might not be good, because then people say, well, yeah, companies are doing okay, but we've got a recession coming or slowdown. They might not make as much money, and that might be bad for the stock market. If you look at the overall fundamentals, we look at the technicals, I do that every week, but you look at this chart, it shows you housing supply. When we're in balance, we need 6 months of housing supplies. And if that's between 2020 to 2019 average. 2024 with 3.5 months of supply of homes. So we still don't have enough homes. So the prices are not coming down yet. Look at the amount of credit, household credit versus GDP. Average is over the last 20 years is 84%. We're at 73 right now, which is good. We're looking at the amount of interest that the corporations have. They usually have interest coverage of 3 times. Right now, we are 10 times interest coverage. So corporations don't have a lot of problems with higher rates. Bank capital and banking system, usually we have 11% tier 1 capital. Right now, we're at 14%. That's better than. You're looking at households' balance sheets, net worth compared to disposable income. Average between 2000 and 2019 is 6 times. Right now, we're at 8 times. If you look at all these fundamentals, we're much better off right now than we were in a long, long time if you own your own home and if you own stocks and bonds. If you're listening to this broadcast, probably you have both. So you're not suffering. You're doing very, very well. It's people who are living paycheck to paycheck, unfortunately, they're not doing as well. Economic indicators, yeah, the PMI fell for manufacturing, but that's not a big part of our economy. It's services. That's the biggest part of our economy. That's doing well. I think the big news this week, I know we do get some interest, some other data, not any major data, I think. The major data we'll get is the earnings from NVIDIA. And that comes out this week, and that'll give us an idea. And what the guidance is for NVIDIA. NVIDIA has got a new chip coming out. It's delayed. It might have affected sales this quarter. But when is that going to hit and what it's going to demand? That's really going to be the key. Looking at our technicals, we have come up nicely. As I mentioned, we gapped above this 50-day moving average. Right here is the gap. You can see that right here above this blue line. That was a gap higher where these two lines don't meet. Each one of these lines is 1 day of trading within an eyelash of an all-time high, which is right here. We are right here. Today we're down slightly, 56 and change, but I think we are headed to new all-time highs as we do, but this is wave 3. Then we could get a wave 4 pullback once we get to wave 3. But that's at 57.50. We might see a spike up and then come back down, or we might get here and come back down. So a little bit of a pullback might be good, but I don't expect a major pullback. Not like this 8% we saw right here. This was 8% correction that we saw in July, beginning of August, really is when it happened. Weekly chart, each one of these lines is 1 week of trading. The vertical lines, the green and the red that you see, and you can see that we're nicely above the 20-week moving average, pushing to new all-time highs. The long-term target is much higher. But then again, it's a year and a half out. Could take us a year to get there. Sometimes it's faster. NASDAQ also above the 50-day moving average, or the blue line is the 50-day, the red line is the 20-day moving average, still above that. Looking like maybe just not as much strength here. And one of the weeklies, we are still looking at my dot plot. That is negative. When the market is below these dots, it's negative. When it's above these dots, it's a positive market. And when it turns down, which it did right here 3 weeks ago, usually you stay down for 6, 7, 8 weeks. That was what we saw last year in October and through the end of the year. This might be the same sort of situation, and then we take off again. I'll have to wait and see if we go through that. Interest rates still sitting at the 3.8% level. If we did one day come down, that was August 5th. Right now we're right about here at 3.82. And as long as we're here, we're not too much stress in the market. Even if we go up to 4%, it's okay in rates. Oil snapped back up today, going towards the 200-day moving average because of the heightened tensions in the Middle East, but I don't expect that to have any major impact over the long term. Small caps coming along nicely, still looking at this 245 high that we made. That's the initial target. If we can break out above that, then we look at 260 to 285. For the small cap chart and long-term analysis, this is a weekly chart of the IWM, which is the ETF for small cap Russell 2000. Gold market looks good, but looks like more like a fifth wave top. Could see some pullback. If we get down to 2400, 2450, I think I might, we talked about a lot more about gold and what we're looking at as far as the gold market on the podcast. So make sure you tune into that. Javed and I talked about that and why we're starting to take a look at the gold market. Again, if you want more information, go to compact.com/media or drop me an email at invest@compact.com, and we will be more than happy to give you a call, set up an appointment, do a Zoom meeting, show you what we do and how we do it differently. Thank you again for joining me today. I'm Mo Ansari, President of Compact Asset Management. I will be back with you at the same time next week. Monday we're closed for Labor Day, so we'll be back on Tuesday. Have a wonderful week. Until then, good trading.
This presentation contains the current views and opinions of Moise Ansari, Chief Investment Officer of Compact Asset Management, a registered investment advisor. The views expressed are current only as of the date of this presentation and are subject to change. Nothing in this presentation should be considered investment advice, and nothing is personalized to any investor's individual circumstances. Compact Asset Management offers investment advice only after entering into an investment advisory agreement and gathering client-specific information about goals, objectives, financial status, and risk tolerance. This presentation uses terminology associated with technical analysis and provides charts to illustrate some of the concepts discussed. Technical analysis is a security analysis method with the goal of forecasting the direction of prices of securities or market indices through the study of past market data, primarily price and volume. We make no assurance that past performance or the use of technical analysis will accurately predict future prices. Further, a risk of technical analysis is that over-focus on historical patterns could lead to ignoring or downplaying security-specific concerns, overall market or sector concerns, or other factors because we assume inaccurately that historical patterns will repeat themselves. In no event is past performance a guarantee of future performance.